Welcome back, everybody. This is going to be our October market update. We did just pass Halloween weekend. It's the beginning of November. We will have the last month's data out soon, so expect a market update again within another week or two. But let's jump into October. We're going to talk about the market. So actives, pending, solds, median sales price. We've got to touch on the inventory. We're also going to dive into the 30-year fixed rate, talk about that, what the average is nationally, what that means for you as a buyer and also as a seller. We're going to touch a little bit on forbearance. We're going to talk about Airbnb and some rules that they have evoked, and then also the question, should you renovate prior to selling? All right, let's jump into it. All right, so first, monthly indicators. As you would expect, strong buyer activity has continued into the fall, which is normally when the market starts to slow down. Typically, we have our seasonal low of inventory in December. And so if we compare this week or this month's data to last month's data, you'll see that the inventory actually has continued to drop. We're going to dive in on that in just a second. Another thing to keep in mind is that while mortgage rates remain near record lows, the MBA has said that the lending standards are tightening, which I think is actually a good thing. A few of the lenders that I'm in close relationship with, it's actually not uncommon that I'm seeing deals are falling out of escrow right now. So the fact that we're tightening up the guidelines, I think, is only a good thing. We're having so many offers on properties right now, 5, 10, 15 offers on a property, and when a property's in escrow and it falls back out, it's not a good look to the rest of the market. So by tightening guidelines, I think that's good. I mean, the rates are so low, everyone's trying to buy right now. The inventory as low as it is, with less people jumping on and they're actually able to get pre-approved, I think it makes for a healthier market. All right, so our total market overview. The first thing that we want to look at here is homes for sale, negative 44%, and then the month supply of inventory right under that is negative 48%. So this is continuing to drop. Last month, we were at 1.5. Last month we were at 1.5 and now we're at 1.3. And again, we're going to have October's data. This is data from September. We're going to have October's data in just a week or two. So I'd be surprised if that number is even lower. Now, so just as a refresher, 1.3 months of inventory. What does that mean? It means that if homes were to continue to sell at the same rate as what they're selling now, that's the amount of time it would take for all of our inventory to be completely dried up. That's assuming that no new listings are hitting the market and that our current inventory is continuing to sell at the same rate. So 1.3 months of inventory is all that we have. They say a healthy market is somewhere between 4 and 6 months, and then anything less than 4 months is what we would call a seller's market. So San Diego, super heavy seller's market, really have always been a seller's market, but our inventory has never been this low. So with that in mind, with the inventory as low as it is, let's come up here and look at new listings. We would expect that to be down negative 14%. That's not a shocker, but pending sales is up 11%. So with nearly almost 45% less inventory, we still have a positive 11% homes that are going into escrow. That's giving you some type of indication as to how competitive it is. And if you're in the market yourself right now, you know this firsthand. Okay, median sales price, this time year over year, up 15.7%. So countywide, all-encompassing, detached and attached, $665,000 median sales price. Now let's look at the percentage of original price received, 99.7. It is almost 100%. And you see that's a positive 2.4%. So that's the percentage of list price that was received for the offers that were accepted. So what that's telling us is that you really have to be competitive. This is not the time where you think you're going to come in and grab a deal, right? Because essentially, and this is what I'm telling people, sometimes a deal here in San Diego County is simply just acquiring the home. Because the inventory is so low, because the demand is so high, low supply, high demand, it's almost a guarantee that your home's going to continue to appreciate over the foreseeable future. So that's why I call it a deal, because investing in San Diego real estate really is one of the safest areas that you can invest in across the nation. So the appreciation is strong, and when you factor in appreciation on an already higher price asset to begin with, you're taking advantage of compounding interest. We're going to dive in a little bit deeper here to the housing supply. Strong buyer activity, we know this has continued, multiple offers, etc. And the other thing too, market-wide, inventory levels are down 44.8%. We know that, but the smallest decline was actually with condos. And with COVID, there has been I don't want to call it an exodus from downtown and condos in urban areas and metropolitan areas, but there's certainly a larger inventory in downtown and areas where, neighborhoods where you have a higher condo townhome population. There is more inventory in those areas, and especially downtown, I think really could be a great opportunity because you're competing against less people right now. And with all of the future development projects that are scheduled for the future, it really is a great opportunity. Now, the other thing that I want to point across here is that if we look at by square foot, 1,500 square feet and below, and between 15 and 2,000 square feet, which is a large population of homes here in San Diego. If we look just at single family homes, the inventory is even less, 0.7 for 1,500 and below, and 0.8. So remember, countywide, we're at 1.3, but 0.7 and 0.8 is a negative 56% change. Next, we're going to take a look at the 30-year fixed rate mortgage. And if you look from just a few days ago, October 29th, we're at 2.81. And if we go back just to the beginning of the year, January 1, you'll see it was 3.72. 3.72 compared to 2.81. That's almost a full percentage point. And on last month's analysis or market update, I did an example where if you factor in what the median sales price was back January 1, it was $587,500. And if you factor in that 3.72 interest rate and the median sales price back at that time, you get about a $2,700 payment, principal and interest. So if you compare that with right now, median sales price we know is $665, and with a 2.1% interest rate, your principal and interest payment is almost identical. I actually did it last month when the median sales price was at the average sales price was at 6.5, right around there, 650,000, and the payment was virtually identical. So now what we're going to do is we're going to head over to the MBA Mortgage Bankers Association. Share of mortgage loans in forbearance has declined to 6.32. I think last month we were at 7.18. And so for the 18th week in a row, the number of loans in forbearance has dropped. And even just a week ago, 6.81, so about a half a point in just 1 week, down to 6.32. And then the last thing I'll mention here is, you see down here there's a quote, on a more positive note, nearly 2/3 of borrowers who exited forbearance remain current on their payments. So this is really positive because I think it's just one more reason to show why I would not expect any type of foreclosure boom. Nothing like in 2008. I'm sure we're going to get some little spike, but I really don't even think it's going to be felt, especially here in San Diego where the inventory is so low. All right, next we're going to Airbnb. So earlier in the year, they announced a global, not just national, but global party ban. And just this past weekend, they actually had eliminated one-night bookings. And, so essentially what's happening is they're really trying to honor the communities throughout, not just San Diego County, but throughout the nation that have been complaining that there's too much partying going on And so by eliminating one-night stays over Halloween weekend, you can see kind of the direction on where it's going. All right, now lastly, we're going to touch on should you renovate prior to selling your home here in San Diego County. This is an article by Keeping Current Matters. They say probably not. And again, this is coming from a national level, not even from a county level here in San Diego. They say in today's hyper-competitive market, buyers are often willing to overlook cosmetic or minor repair needs if it means snagging a home in their price range. So, this kind of goes hand in hand with what I discussed, whereas sometimes the best deal you can get here in San Diego County is simply just acquiring a home because of how competitive it is, and with the low supply, high demand, what that means for appreciation and your home's value and the equity that you'll build for the foreseeable future. Now, I'm not saying that you shouldn't do anything to get your house ready to list. It's super important. You only get one chance to make a first impression, of course, but don't think that you necessarily have to spend 50, 75, 100 grand if your home, is a mess and you have to get it rent or list ready. You may just be able to get by with some cosmetic upgrades. Maybe new flooring, maybe not, but paint, touch-ups, maybe some landscaping, things of that nature. You may not have to break the bank just to get your house ready to list because it is so competitive and the supply is so low. So that's it for this month, guys. I'll be back in a week or two with another update as soon as the new data is released. Thanks for watching. Be sure to like and subscribe. Share this with a friend. Leave a comment if there's anything else that you'd like me to bring up or address in these monthly updates. And for all your buying and selling needs here in San Diego County, you can reach me at 619-944-2580. Hope this was of some value, and I'll see you guys on the next video.